Bitcoin, SEOUL.org, the Asian Whale Club, for Bitcoin investors with over 50 Bitcoin in play. We help you manage your Bitcoin for maximum profit. Okay, let's do a super crucial core nugget lesson on how to invest in Bitcoin so you actually make money, so that you don't FOMO and so that you don't FUD. FOMO means fear of missing out, FUD means fear, uncertainty, and what is it? The D. I never remember the D. Anyway, you can tell me in Twitter. Okay, the theme of this video is going to be the wealthy do not understand wealth any better than the poor, just like the healthy don't understand health any better than the sick. And this is where your opportunity comes in. Now think about this. I don't know whether you're investing at a level of $10,000 or $1,000 or $1 million, but the truth is, there's always somebody with more Bitcoin than you, right? However, just because they have more Bitcoin and they've had it longer, guess what? It doesn't necessarily mean that they know Bitcoin better. It doesn't necessarily mean they know trading better. It doesn't necessarily mean they know Bitcoin trading strategies and tactics better than you do. So, why is that an opportunity? Where does money go? Money always flows from the ignorant to the informed. That's your opportunity. All you have to do is know a little bit more than the rich guy overhead, and his money will flow to you. Okay, part one of this series, timing and sine waves. The perfect example of how I want to explain that markets, money, buying and selling, volume, all of this flowing money happens in sine waves. It goes up and it goes down. What that means is that there's a lot of people buying and then there will be no people buying. There's a lot of people buying and selling and then there will be no people buying and selling. It's always a sine wave. This is why timing is so important, and I'm going to give you an example as to how this applies. I just got one of our Whale Club members. Whale Club members have about 50 Bitcoin they're investing, so they're not poor people, right? Obviously, they're looking to get money from the people that are way wealthier than them. So if you're a millionaire, you want the money of a billionaire, right? So that's who you're trying to take the money from. Trickle down. So this one Whale Club member, Asian Whale Club member, asked me, and I was just confounded. I was just shocked that they would actually even ask me this. They said, "Why is it that you're scamming me? Why are you scamming me? 90% of the calls and signals and tips that you give us in the Asian Whale Club, which we paid 2 Bitcoin for, or 2.5 Bitcoin for, depending on when you got in, as a monthly membership due, which is a lot. It's about $10,000 or $12,000 a month to be a member of the Asian Whale Club. It's not cheap, right? Even if you're a billionaire, that's not cheap as far as monthly memberships go. It's probably right up above your fractional jet lease fee. So I was confounded, just took me aback. Now, I didn't even answer this person. You guys are welcome to answer this, in fact. So after a while, I replied back and I said, all right, look at the timestamps and compare the timestamps between when I told you to buy or sell versus when I told our Dolphin Club to buy or sell versus when I told Twitter and versus when I told you to. Compare the timestamps. Why is that important? Here's the answer, if you haven't figured it out already. Money flows on a sine wave. At the peak of this sine wave, if I tell our Asian Whale Club members, which even if they are millionaires, there's not hundreds of them, there's only a couple dozen of them, right? So even if they are millionaires and they've got $100,000, $500,000 if they're moving around, there's only a couple dozen of them. That's not huge volume. So if I tell them at the peak of this buy-sell cycle, this sine wave, you should sell now. And they're older, they're not super young, so they're going to take a little time. They're going to take a couple minutes to figure out how to sell. A lot of them. I know there's a couple of you that are really young. Don't be insulted. I'm sorry. If you're in your 30s and 40s, I didn't mean you're old. So, if you sell at the top, what happens to the sine wave? It starts diminishing a little bit, slightly down. So then, I tell all the people in our Dolphin Circle, who are young, they're agile, they stay awake 24 hours a day, and so their buying or selling cycle is a little bit down from the top, okay? And then, our Twitter people are literally just a few seconds behind that. Now, the reason why I do that is because Twitter now, we have a couple thousand, we have 16,000 followers, and I don't know how much volume is in our Twitter followers. And then our YouTube subscribers, we have like, 12,000 YouTube subscribers right now to date. Views end up being about 80,000 to 90,000 views per video. I do not know how much volume is back there. So what I'll do is I'll release it in Twitter first, and then I'll release a buy-sell signal in YouTube last. Why? So that the big money can follow the smaller money. What ends up happening then? Because of that sine wave factor, whoever sells at the top can get away in and out, make a deal, make a trade in and out really elegantly, really agile, and be done with it and have maximum profits, and the people right behind it don't lose much, if in fact anything. Because if your volume is smaller, you can actually get better deals. So we have to talk about volume now. Even if you sold later than the guys that are in the Asian Whale Club, you can actually sell at a higher price if your volume is smaller. So timing is absolutely everything. And so this is why, to answer the question of our Asian Whale Club member, I tell everybody exactly the same thing as we tell people in our Asian Whale Club 90% of the time. Okay, if it's 90, I don't know that it's 90. I really haven't measured it. But if it's 90, this is why we do it. Let me explain it a different way. Let's say you're kayaking in Yosemite, and you jumped into Yosemite River. After you jump into the river, do you want there to be water behind you? Water pressure coming in behind you or not? Think about that for a second. Okay, let's talk about volume after we touch on this one part, the second half of this conversation about timing. I get people saying, "Wow, you're such a scammer. You told everybody to buy SIA coin at 300, and look, now it's 250." I also get people that say, "Wow, you told everybody to buy SIA coin at 300. It's only been 2 days. Can I buy now?" And I also get people that say, "You told everybody to buy SIA coin at 300, and now it went up to 500, and then it went down to 300 again. It's the same price as when you told everyone to buy it in the first place 2 days ago. So can I buy now?" Now, if you know the answer to these questions, this is going to sound so dumb, but I'm going to explain it anyway, because I keep getting these tweets all day long from people that apparently don't know the answer to these questions. Okay, let's unravel this with a real world example. When Bitcoin was right around $4,400, it plummeted suddenly based on China FUD to 4,100, just around 4,100, 4,150. And I said, wait, hold. I just said, wait, hold. And sure enough, a couple hours later, it fell to 4,100, fell underneath that. And now I get all sorts of trolls and hate mail saying, "You told us to hold Bitcoin, it went down. I hate you." Why would that be? Okay, let's analyze this. Let's just play chess two moves ahead. Okay, let's just play chess 2 moves ahead. I'm not talking 5 moves ahead in chess, just 2. If Bitcoin goes from $4,200 and you're holding it 42, and if it happens to fall to $3,800, oh my God, the whole world is collapsing, right? No. It's a stinking 10% drop. 10%, that's all it is. $4,200 to $3,800 is 10%. Now, what if you decided, I'm not going to risk it, it's too scary, I'm going to sell the USDT. USDT costs about 2%. It costs about 2%. So let's say you moved it to USDT, and well, Bitcoin dropped 10%. You know what just happened? You only saved yourself 8%. You didn't save yourself 10% because you paid the extra 2% to USDT. So you're not saving that much money. Okay, so now you're proud of yourself. Let's say you did it anyway. You're proud of yourself that you saved yourself 8% of your Bitcoin. Okay, that's a fair accomplishment. You're not counting opportunity cost. Opportunity cost is the most expensive cost you'll ever incur. Who was it? Was it Rockefeller, or was it some other really rich industrialist who said the greatest amount of money that you'll lose is the money you never made? Who was that? Okay, let's go into application now. How does this apply? If you didn't sell your Bitcoin when we told you not to sell your Bitcoin, and you held on to it, you would have noticed that while Bitcoin might fall 8% practically, right? Net 8%, not net 10% to $3,800, which didn't happen yet and may not even happen as of the timing of this recording. You would have noticed that MCO fell 23%. I'm sorry, MCO. Metal, MTL. MTL fell 23%. You would have noticed that Litecoin fell 12%. You would have noticed that OMG fell 10, 11%. You would have noticed that, oh my God, there's so many. You would have noticed that Zcash fell 10, 11, almost 12%. What am I trying to tell you? You lost a 22% gain opportunity, a real 22% profit opportunity, because you were running away from a phantom 8% loss. Does that make sense? If you sold Bitcoin when we told you to hold Bitcoin, what you did was you basically ate the goose that lays the golden egg because you were afraid you might not have money for dinner. I'll spell it out for you even further. The golden egg is the act of leveraging the Bitcoin that you have, leveraging the golden egg-laying goose that you have, into buying alts like metal that dropped way more than Bitcoin didn't drop yet. Think about that. In reality, between the time that I said hold Bitcoin and the time that people started asking me, hey, or yelling at me, why did Bitcoin drop? Bitcoin only dropped about 3-4%. Bitcoin dropped about 3 or 4%, and then people started having just a hissy fit about Bitcoin dropping after I told them to hold, when what they should have done was just looked around and said, hey, I'm holding on to Bitcoin. Sure, it's going to drop in value, but what's dropped more? And then just make that goose, which is Bitcoin, lay you a golden egg, which is MTL, or any other coin for that matter. If you can find something else that's a premium coin that's dropped 23% in value over the last couple hours. That makes sense, doesn't it? It's not extreme calculation. It's not super high level strategy. It's just logic. If you compare this to chess, you're only thinking one move ahead. This isn't very complicated strategy here. Okay, this episode's getting a little long, so let's end it here. I do want to end on this note. If you buy 2 days after we send the signal, or if you sell 2 days after we send the signal saying buy or sell, your timing is way off. We don't know where you are along the sine wave. So even if, let's say we said, hey, sell SIA coin at 300, it went up to 500, and then it went down to 300 again, and it looks like, hey, it's the same price that you said buy SIA coin, so I'm going to buy it now. And then you send me a tweet saying, okay, I just bought SIA coin, thanks, great tip. At the time we told you to buy SIA coin, if we did, which we haven't yet, ever, as an example, we told you to buy it because it was going to go up. If it reaches back down to 300, it's impossible to know without doing more analysis whether it's going to go up again and bounce off the 300 or going to fall through a support and fall to 200 or 100 something as it is now. So the cost isn't as important as you think. What's important is the timing and where you are along on this sine wave. And if you don't understand what a sine wave is, Google it. Okay, next episode we're going to deal with volume and slippage, because these are the main reasons why you can buy at the same price and sell exactly 2 seconds later at the same price, and you'll still lose money.